I think as far as China is concerned, it's probably over. I mean, they don't want to part with any of it. And, what interests us is I think that the tight-fistedness when it comes to rare earths also extends to silver. We know it extends to gold. I mean, China, I keep on saying China is like Hotel California as far as gold is concerned. You go in, but you don't come out. So, but I think it's now the case with silver. I don't think we're getting any supplies. And of course, ETF demand is just taking off. I mean, talking to various people. I mean, I had one podcast cancelled this week because they were too busy to do it.
Something historic is happening in the silver market, and almost nobody is prepared for it. China, the world's largest buyer of gold and a growing powerhouse in silver refining, has just taken a step that could end the COMEX paper-silver system forever. According to economist Alasdair MacLeod, Beijing has quietly stopped exporting silver and is hoarding it domestically, just as it did with gold years ago. He calls it the Hotel California strategy. Silver can go in, but it never comes out. And that move may have just triggered a chain reaction that could redefine the global monetary system. All over the world, in Australia, Switzerland, the US, and the UK, bullion dealers report being swamped with buy orders. Physical silver inventories are drying up, premiums are surging, and lease rates have exploded to record highs. One report even hit 90%, signaling extreme desperation from short sellers. Meanwhile, Western institutions are stuck playing the same paper game on COMEX, while the real metal vanishes from circulation. MacLeod warns this isn't a temporary spike. It's the start of a global shift from paper to physical that could permanently change silver's price structure.
I mean, this is a bullion dealer who's absolutely swamped with buy orders, both gold and silver, and that's in one country, Australia. I also hear the same from my contacts in Switzerland, and I also hear the same from my contacts in America and also in the UK. I mean, everywhere. Suddenly, everybody is beginning to buy. I mean, talking about retail market, is beginning to buy, coin and small bars. And everybody's sold out. Yeah. Do you think under these circumstances that the price of silver is going to come back? Do you think that China is going to suddenly say, oh, well, we'll help you out. We'll let you have a bit of stock? I mean, no. Big backwardations in silver and lease rates soaring. I mean, I heard one report that it was 90% or something. I mean, this is desperate. This is desperation. The shorts are desperate. And of course, the other thing they do, which continues to fuel the price, is they borrow ETF shares and sell them to get the underlying metal. And deliver it, if you like, in accordance with their obligations. But the problem is they're then short. They have got to reverse the trade. So they haven't actually got themselves squared. It's rather like a payday loan. They've bailed themselves out for only days, literally. This is, And wow. I mean, quite experienced hands say that they've never seen anything like this. I mean, not even the bunker hunt. What, sort of 40 years ago, it was quite so difficult as this. I mean, the bunker hunts they were sorted out by a mixture of COMEX changing the rules, and I think that also the other thing is that they were going to get Arab backing. They were promised Arab backing. And the Arabs were persuaded not to play. So, their scheme fell apart, trying to corner the silver market. But there's not one person, just trying to corner the market. This is everybody realizing that silver is way underpriced. I mean, you have a gold silver, I'm looking at my screen now, a gold silver ratio of 79.98. It should be somewhere between 20 and 30, which means that silver is mispriced. And what's triggered it, obviously, is the rise in the price of gold. It's really sort of brought forward the cheapness. And of course, people who sold gold earlier on aren't going to go and pay $4,000 they're going to go and buy silver because they think it's the cheap way in. It is the cheap way in. Yeah, it makes an awful lot of sense. But they don't have the problem of having sold gold, let us say, at $2,500 to only to get over the emotional hump of trying to buy it back at 4,000, 4,100, 4,200, whatever. It's far easier to say, okay, forget gold, we'll go and buy silver. And that's what they're doing. I mean, and bear in mind also that if you look at global portfolios, their exposure to physical gold is less than 0.5%. And yet you have got people like Goldman Sachs and Bank of America and all the rest of it. Their strategists are now saying, buy gold. And I think Morgan Stanley even turned around and said, you should have 20% of your portfolio in gold. I think by that they mean in gold and gold-related investments, to be fair. What have the portfolio managers got? I mean, you look at these banks have got over $1 trillion of funds under management each. What do the poor investment managers do? They haven't got any of this stuff yet. The big high honcho in the head office is saying, buy gold. His ultra high net worth individuals, $100 million each minimum, turning around and saying, you're recommending gold. I haven't got any. Why haven't you bought some for me? So you can see that we're into the realms of peer pressure here. And this isn't something that's going to stop, if you like, because I was reading, one of my Substack followers very kindly sent me a note from one of our papers, quoting experts saying, "Oh, this run is getting mature and it's getting very volatile and it's generally a sign of a top." I mean, come on, they haven't a clue what's going on. They don't understand the dynamics of it. So it's a fascinating thing. I mean, normally these problems are resolved by a rise in price. But the problem is, the more the price rises, the more people buy the stuff and the less stock there is around.
MacLeod explains that China's latest actions mirror its gold strategy: accumulate relentlessly, restrict exports, and let the West run out of real metal. For years, China allowed silver exports to keep Western markets supplied. But now, just as it did with rare earth minerals, Beijing has decided to cut off the flow, using resource control as a form of leverage in a changing world economy. At the same time, retail demand is exploding everywhere. Dealers say shelves are empty, ETFs are draining, and futures traders are resorting to borrowing ETF shares just to cover deliveries, like payday loans in a broken system. This is not speculation, this is structural failure. The gold-to-silver ratio still sits around 80-1, far from the historical range of 20 to 30 to 1, meaning silver remains undervalued by at least threefold. Investors who missed gold at $2,000 are now turning to silver as a cheaper entry into precious metals. The result? Massive inflows into physical silver just as supply collapses. Even Goldman Sachs, Morgan Stanley, and Bank of America are telling clients to raise gold exposure. But most institutional funds still hold less than 0.5% of their portfolios in physical metal. That disconnect could ignite a rush when the realization hits that there simply isn't enough silver to go around. And it's not just financial. Geopolitically, this ties directly to today's headlines. After years of tariff tensions and tech wars, China is decoupling from the U.S., restricting exports of rare earths, gallium, and now possibly silver. That's the same playbook being used to starve Western markets of critical resources while securing long-term economic independence. In short, China has pulled out of the silver supply chain. Physical demand is surging worldwide. COMEX short sellers are cornered, and Western investors are just beginning to realize what's coming. As MacLeod puts it, the more silver rises, the more people buy it, and the less stock there is around. That's not normal economics. That's a monetary awakening.
I think there's a term for it, this sort of thing where a higher price, restricts supply even more and creates demand. I think it's a Giffen good or something. That's what we've got here. I don't know about you, Daryl, but I'm finding, having sort of promoted the idea that, gold is a safe haven away from collapsing credit, I'm finding more and more people are now talking in that vein. which pleases me because people are beginning to understand why they should protect themselves. But it is interesting that I think we're just in the beginning of this. I really do. I mean, bear in mind that in the early days when China embraced capitalism or, markets, if you like, its main export market was America. I mean, they had a massive, massive trade surplus on America, particularly because a lot of American corporations set up their manufacturing businesses in China. So this was American business, just relocated to China. Now, that's gradually declined. And when President Trump took office, that decline actually accelerated. And now, from being such a dominant part of China's exports, America accounts for only about, less than 10%, and it's still declining. So that's the background, if you like. You have President Trump threatening this tariff, that tariff, and all the rest of it, and really being pretty capricious about it. There's no sort of certainty. You can't deal with a man who keeps on changing his mind. So from President Xi's point of view, he doesn't really give a damn anymore. I mean, what's the point? So, it was becoming quite clear that America was just, not playing ball with anything. And in the race for technology, which is actually very, very important, China decided, okay, if we're going to win this race, then we've got to make sure that our competitors don't have rare earths. So she announces restrictions on the export of rare earths. Trump blows his top and says, I'm going to add another 100% tariffs on, And President Xi goes, literally. I mean, the markets, when Trump tacoed, Trump all chickens out. When he tacoed, I mean, this has got to be a new word, hasn't it, in the dictionary? What did China do? Did they say, as Trump hoped, oh, thank goodness for that. He's being realistic. He's being sensible. Now we can negotiate. Did they? Hell is like. It just said nothing.
It's cold.
Absolutely not. And they're not going to change. They're not going to change their policy, if you like, of starving the West and particularly America of rare earths. And I think we can also add silver to that. This is something which nobody's talking about. But China has been controlling the silver market for a long time. It's obviously decided to no longer control it, because control of prices basically means that China has to export silver in order to supply the markets. And we know that there's been a supply deficit of silver for, 5-6 years. Met by what? The Silver Institute says it comes out of investment silver and so on and so forth. Really? I think you'll find that it's actually been, on the margin, it was supplied by China. They've withdrawn from the market. So they're not, they're not in the business of suppressing the silver price in the West anymore. As far as they're concerned, they're going to hang on to their silver. We can go hang. Well, it's got the leverage. It's got the leverage of rare earths, which America desperately needs. But they're not going to get it. It's quite simple. It really is. I mean, I think even if Trump backed off and said, "All right, we won't do any tariffs at all," China would say, "Well, yeah, we might sort of help a little bit, but once bitten, twice shy." The schoolyard bullion analogy, actually, you go back to Modi of India, because Trump tried to bully him about processing Russian oil. He said, right, 50% tariffs on India. So what did Modi do? He said he just refused to reply. And apparently Trump tried to phone him 4 times and Modi refused to pick up. And the next week he was over in Beijing or in China for the SCO meeting. It was not Beijing; it was another of their many cities. Hugging and kissing with Xi and Putin. I mean, you couldn't have a clearer statement from India as to where they reckon their interests lie. I mean, India certainly exports quite a lot to America, but they weren't going to be bullied, and nor is Xi. And bear in mind also that they basically want to get rid of the dollar. Do they want to do more trade? More trade means they've got to have more dollars. No, they don't want that at all.
What we're witnessing now is the early stage of a monetary transformation, one that could shatter the illusion of paper silver and restore real price discovery through physical demand. MacLeod's message to investors is crystal clear. Hold real metal and don't trust paper promises. Silver is no longer just an industrial metal. It's monetary ammunition in a world rapidly losing faith in fiat. And here's the key question for you. If China is locking up silver and global inventories are running dry, where will the next ounce come from? What price do you believe it will take to bring real silver back to market? $50, $100, or more? Share your thoughts in the comments. I read every one of them. If you found this breakdown helpful, hit subscribe, turn on the notification bell, and give this video a like so more investors can see what's really happening behind the headlines. This is Metal Watch, and we'll continue bringing you the most important updates on gold, silver, and the global financial reset unfolding right now.